What indicator?
Hey Dan, I'm talking about the Som rule recession indicator. Something that caught my notice this week, hearing some people talking about it getting close to triggering. So for those who aren't aware of who Claudia Som is, she's a Fed governor, I think. I think
That's
Fed governor.
audio for question mark.
Yeah. Uh, Yeah. Oh, I'm sorry. Now she's serving as chief economist of New Century Advisors, but I believe she used to be in the Fed. Anyway,
Hmm.
she did some research a while back and published this paper talking about what's become the Som rule, where they look at it's a sort of a moving average of unemployment rate, and as unemployment starts to accelerate, that's an indication that a recession might be impending, which makes sense. If you're trying to have a lot of people lose jobs quickly, the GDP is, which is how do we define depression? I'm sorry, recession is a decline in GDP for 2 consecutive quarters. So if you're having people losing jobs that aren't getting income, that aren't spending money on goods, then yeah, one thing leads to the other. It's just interesting to me, though. The indicator is currently about 0.3. The danger level is a 0.5, meaning a 0.5% change over the three preceding months. And actually, I wonder if for our viewing audience, if I'm able to do this. Boom. So
There you
here we
go.
see today, we're currently, so we had a giant spike during the pandemic. That makes sense. 2008, we see it leading up into 2008. It starts to hit right about that 0.5 level right around January, which it does align with the start of a recession. But my question is this a leading indicator because it's hitting that threshold? Oftentimes when the recession's already been going. So it's more of just things are an indicator of things are getting bad. I don't think it has much credence. And also, our unemployment rate is still very, very low.
Very low.
Overall, 3.9%. Typically, historically, a 5% unemployment rate has been considered to be kind of healthy for the economy. You need some workers churning over, looking for new jobs, and companies able to find new workers as they're trying to grow. If they don't have anybody to nobody that's able to take a job, and you want to grow your business, it's very difficult.
Or wants to take the job for what you're willing to pay, right? And then if you have to raise your wages in order to, I mean, this is tricky because it gets into people's expectations or whatever. But if that's broadly happening, everyone having to raise their wages in order to get anyone in the seat that's open, right? Then that's another cause of inflation.
Very much so, which I think is something we will be talking about today. So today we're going to be revisiting an episode we recorded back in, I think it was January. We made a couple predictions that we're going to revisit, see how good or bad we did, and talk about what we see coming up here for H2. Very laughable. I mean, we obviously missed a lot of things that happened that nobody saw coming, which is, how it works in the world.
Yeah, kind of always works that way, right? But I feel like I've been wrong more often than right since, I don't know, November 21.
November 21. Interesting.
That's when I dipped.
Yeah, that was when everything kind of started to really turn and led into a pretty bad start of 22, right?
Yeah.
But then the back half of 22 got a bit better.
It did, but I was super pessimistic, so I didn't ride much of that.
It was scary coming out of, seeing that was really when inflation really started to spike, if I remember correctly. And I think everybody was realizing that things might not be so rosy. It's surprising how I think things have turned out overall, though.
Exactly. So this elusive recession, right? Despite the yield curve, despite the Som rule, despite how many other indicators that have sort of shown the light of we should be expecting one sooner rather than later.
And this is actually one call we got right. We said at the beginning of the year there was no chance of recession this year, and I think sitting here mid-year, I'm still standing behind that.
I think so too. Next year might be different.
Next year feels dicey right now.
Why?
Some past historical trends of it's like when this happens, the odds of this happening are more likely. So we're still talking about the Fed eventually cutting. We had thought, again, revisiting one of our earlier predictions, that we would see a cut by June, and here we are recording this middle of June and no cuts and none planned. And I don't think we're going to be waiting a whole lot longer. But when they do start to cut, interest rates are brought up and brought down in cycles. And as those cycles happen, it's interesting to see what kind of occurs. Really, as we've started to cut in the past, a lot of times, about 50% of the time, and that's kind of a coin flip, I guess. It doesn't really mean anything. It's 1 and 2. It's kind of we do see some drawdowns start to happen after an aggressive hiking cycle where we then start to cut. Again, it's not like these numbers aren't terrifying by any stretch, because there's a lot of good user performance.
I was going to say, it seems as you might expect, more tied to the economy and the performance of companies rather than the actual cut being the cause of these returns.
Absolutely. And but I just wonder, when we start to cut, if that's a sign of that the economy is weakening more in other ways, because we've seen.
Because we're waiting to cut until we see the weakness.
Yes, exactly. So if we see a cut, I think the Fed's shown that they're not going to cut without seeing that weakness.
Yeah.
Is that indicative then that things might be a little harder coming out of this?
So will they be late with their cuts like they were with their raises?
I don't know. I think we had a kind of an interesting discussion around this last week, maybe, seeing softness in areas in the business world where what kind of demand, like, for example, are you seeing for your consumer products that you're selling? And what kind of demand am I seeing in terms of my day job, where we're making products for oil and gas? I think there's some interesting things going on the production side where, the ISM's manufacturing index, in terms of how the level of manufacturing activity, which is just off survey data, but that's showing that there's production right now seems to be softening in the U.S., which would be indicative that there aren't as many not as many overtime hours,
Fires.
not as many not as many new job openings, etc. So I do think we were starting to see some indicators that there might be some possible weakness, and we have certainly a big event coming up that could cause an inflection point in November of what path is taken in terms of tax policy and fiscal policy for the next 4 years.
All the hard subjects, as in the actual policies or the actual results of the election itself, but also the very hard to define subject of the greater zeitgeist, or like the meaning, or what word am I looking for? It's sort of like the spirit of the people, right? Inflation can be one of those. How many different things in the economy can be one of those things where if people believe it, then it starts to come true, right? Because their beliefs influence their behaviors, the behaviors influence the numbers and data, and then we end up where we had believed we were going to go, maybe only because we believed it, not because we were destined, right?
That's an interesting point.
So
I mean, I think very much, and that's when I think wage inflation can spiral like that, right? If it's like, hey, I need to go get a boss, I need a raise, I need a 5% raise because everything went up around me. I'm just trying to keep up with the cost of living. Their boss, irrespective of actual data in that area, might say, oh, that's right. That sounds right. I believe that's right. And people end up, companies trying to help keep their workers happy, end up having to increase costs overall, and that can cause further inflation for their products, and it can loop in some levels.
So anyway, speaking from my side, I would say since sometime in February, everything has softened and stayed that way. Exactly. So I don't know. I felt like over the past week, maybe two, I've started to see the grumblings in the media of sort of, the headlines and some articles around like, maybe the economy is softening, maybe this is happening, maybe that's happening. And I'm like, no, I've been living that since February. So The data lag is real, but my anecdata kind of shows, or sample size 1 kind of thing, or 2, is showing weakness in some level of weakness in the consumer. Not drastic, but nonetheless something. Meanwhile, I mean, what is more drastic about it, I guess, is that it's not only softening from demand, but all of our costs are up, right? So those two things going together is a real squeeze, which can also lead to higher prices or just lower or we're all, speaking for myself and everyone employed by me, we all take home less kind of thing, right? And in some ways, this is exactly what the Fed wants. I mean, when they started the cuts, the
hikes,
the raising of rates, it was
too slow.
We need to see 1.5 million people, 1.5 million Americans unemployed. It's that was such a start. I mean, I remember just like in the press conference, and it's such a, it really gets easy to begin to understand why so many people hate Wall Street, because it's like, they treat the economy as this machine, right? And particular data and particular numbers are extremely important to manage towards, as you would in any business or much of your life. But when you're dealing with the entirety of the economy, you're dealing with a lot of souls at the same time. And it gets really hard to talk about these things in a human way. You kind of have to remove yourself from it.
I think you have to be dispassionate on some level, which also makes people hate people who talk like that too.
Yeah. No, like I'm coming from a standpoint of like, I completely understand the emotion. However, there's still
there's still the reality
really
over here
things
that needs to be thought about and considered.
Yeah, because if you let the problem run away from you, it's kind of hard to put the cat back in the bag.
Well, moving on from our prediction of no recession in 2024 I guess if you want to talk about why I was saying 2025, it worries me. I think what we just talked about, what we're seeing in terms of this softening that we've seen, but also again, years after election years tend to be, and this is not necessarily indicative of a recession, because the stock market is not the economy, but the years after a presidential election, the S&P is more often down than it is up, but it's like a 2-to-1 ratio. It's again not a strong indicator, but it is just one of those things that I think, because you have, and I think logically it makes sense, because if you're having frequently changes of power, you're changing monetary policies, and those shocks implement
fiscal policies.
the fiscal policies get implemented. Shocks to the economy happen, and that can cause things to have to readjust. And when the stock market goes down, it then starts going back up, usually pretty quickly after. So sometimes it's kind of a good culling cycle that has to happen every once in a while. But yeah, that was the one last thing I wanted to mention as to why I had some questions about 2025 in my head at this point.
Yeah, but I mean, adding into the 2025 point, I feel like there's enough psychology out there. You add up the 300 some odd million people in the United States. I don't think the psychology is very positive. Despite the data. There was some polling that I was seeing recently that was asking, a fairly broad swath of people, like, some simple questions like, are we in a recession? And it was something like 60 or 70% of respondents said yes. And it's weird because like the whole point of this was to sort of triangulate on people's perception of the economy, one, and two, people's perception of their own lives. And so the majority of respondents basically reported their lives being just fine, but the economy being like really bad. And the economy really bad thing is in the face of every single metric that we've got, basically. So this is going back to like, if everyone believes it, then it becomes true.
Also, can we manifest this with our emotions? Yes, I think yes. That's a very valid point. But also, though, how much of that is the recency bias of things now are always worse than when we were a kid, the permanent nostalgia, and how much of that is it really any different than it was 5 years ago, or are we saying, is it just a
rose tinted glasses?
Yeah,
that's how we look backwards.
Very much so. There was, for example, I saw this. I think it was the Washington Post that put out this study asking a bunch of survey questions, not similar to what you're talking about, but there was a question saying, when's the worst the economy's ever been? And most people said now. And then even on the question where, and even when on the question said which decade has the worst economy, we were even with the Great Depression. People have this where everybody's tastes and when their opinions are really formed and look back, nostalgia happens in the 5 to 25 year age range, and then it maybe even up to 20 on the high end. So after that, you start to get this negativity that I don't know. It was an interesting read. Just thinking about
that is wild.
Thinking about how people's perception of the modern day is very consistently worse than how we perceive the past. And I think that's why Fox News has been so popular, or been able to make so much money over the years, or why any news channel has been able to make so much money over the years, is looking. No,
they sell FUD. Right? Fear, uncertainty, and doubt.
Yeah. Oh, I thought it was diapers.
This is where I will plug a book by Hans Rosling, I think is the guy's name, called Factfulness. And if you want to feel good about the world that we live in and the time that you live in, backed by data, read the book. Yep. It'll make you appreciate that you live today.
Okay.
Yeah.
I'll check that one out. That sounds good. I started.
Yeah, it's a wonderful book.
The one you recommended last week, the Red
Notice.
Yeah, I'm about a third of the way in. It's a good read so far. Interesting how this guy went and it's magical. I wish I could.
I know.
Be in the room with him on some of these things.
Yeah, totally.
Talking about driving the speedboat out to meet the billionaire, and how one billionaire doesn't wait for another. There's a billionaire hierarchy, and who the lower hierarchy billionaire has to show up early, so that the more important billionaire doesn't have to wait for anybody.
Yep. When you really start thinking about it, you're like,
yeah, it's just petty. We're all petty all the way down.
Yeah. Yep.
No, but
I'm glad you're doing it.
Yeah. Thank you for the recommendation. It's been enjoyable this week.
All right, so we've done rates, and we did just sort of broad where the economy is going, right? In terms of outlook. Let's see some of the other things that we talked about last time. Soft landing.
Been softish. I don't think we're landed yet,
isn't it? But when?
But I don't think we've landed. So.
Yeah.
It's like
exactly.
It's like a soft hover right now.
Do we only land once it's bad? So there is no such thing as a soft landing, because everyone's going to wait until it hurts, and they're like, well,
you need the reset button.
Look at that.
You need the reset button. You need that mentally. Otherwise, it's still the same cycle. That's an interesting point. Because I know there's people out there who aren't going to be happy until they see it see inflation at 2% consistently. And even though I think I've spoken, we expect to see a little higher.
And there are some people that are partisan enough that, depending on what side of the aisle that they feel that they're assigned themselves to, they can't necessarily let the other side win. You know what I mean? Well, by definition, that means it's politicized rather than reality.
Yeah.
But
yeah,
you'll have some of that in the opinion.
Well, also, that's an interesting question, because if you look at perception of people who, if they're for Biden or for Trump, how is their perception of the economy vary? Was that a question that was asked?
There's a sea of difference.
Right. It's got to be just
if my man's in the White House, then economy good.
It doesn't matter.
That's kind of what it comes down to.
Yeah, you always have 50% disapproval or 45% disapproval or whatever. So it's not.
It's a damn shame, because we're all American.
Yeah. It doesn't. It doesn't make. That's why we need a turning man.
Okay. He referenced the fourth turning.
Yeah, I referenced the fourth turning there. All right, it's been a few months. I had to drop my fourth turning reference. We need a crisis, essentially, to bring us together for the hero generation to bring us into the new golden age, so that people then can start getting nihilistic and everything start breaking down again.
So here's a question: How do we create that situation or that passage or that coming of age almost is how it so sounds to me. How can we create that without, like, can you create it? 1, 2, what would it look like for it not to be war?
Alien invasion. Independence Day, I think.
Okay, yeah. Twister gonna be smaller.
It has to happen to everybody. That's the thing.
yeah. I think a storm just went over my house. It's gonna be one in Kansas tomorrow.
Yeah. That's a good question. I mean, a global pandemic was the closest thing we had that probably could have come close.
It could have, but that's what's striking to me is, like, don't get me wrong, it was terrible. It was managed terribly. So many things. However, this is kind of a question, kind of a statement. Sorry, keep tripping over that word. It is as if it wasn't bad enough.
Yeah. For that coming togetherness, yes, because there was still, percentage wise, 1 to 2% of the population being impacted is still
wild.
Yeah, it's a huge number.
It really
but
is.
Also, though, like, I know 100 people. Do I know anybody that actually was impacted? I could see people saying, "Oh no, I didn't know anybody." So, like, they never felt it themselves in the same way. I think there's
it's also
chunks of the population who just weren't exposed to somebody who got really ill and maybe passed or have had long-term effects from it. And also,
it's too slow.
Yeah,
it's too slow.
Yeah.
So death is even if it's not fast, it's kind of fast because it has this stark line. And when I now look back through the years that I've lived since the beginning of 2020, it has been an absolutely wild ride, and COVID had a huge impact on me and my psychology. Huge.
Absolutely.
But I'm only probably recognizing that now in late 23 and early 24. Because in the moment, like, what the hell else were you going to do? Like, life was what it was, and we were protecting a baby. We didn't really. That's it. Yeah, we didn't know how to make that decision, so it was protect baby, and that's that.
This is our priority. We're going to focus here, and
we can give everything else
get
up,
through
no
it.
problem.
Right?
We were lucky that we could. Yeah. But because of that, it's like, so I don't know. I look at it and think so many people were so impacted. It's as if they haven't realized it, like, in a true feel it in here kind of way. We all just soldiered on, and not in like a, I don't know. I heard the phrase soldiered on while listening to someone talk about the anniversary of the D-Day invasion, right? And then it just came out of my mouth there, and I'm like, nope. Not appropriate. Like, doesn't match what I'm trying to express.
Well, the soldiering on, though, is what brought so many people together when that really did have to go through something of that magnitude, though, right?
So what is it? Was it a mismatch between, like, my perception that I was a part of the soldiering on group, and then there were a bunch of people that were just, like, getting back on cruise boats while I was still locked down? Or something?
Yeah, and I think there was a mismatch, and, like, it's like, this doesn't feel fair. Like, I'm over here doing the right thing because I think this is what is needed to keep everybody safe.
And then that creates division.
And then I see,
and then there's no hero.
And then it's like, well, wait, now it's like, okay, all these people did that, and then I guess they're okay. Should I have done what I did?
So that mismatch in the time of change, let's call it, yields not at all the result that we're aiming for with this kind of fourth turning or whatever. And the slow burn that I'm trying to describe or get at is one where we don't actually all arrive together at the same place at the same time. We all have to, like, turn around for a moment and, like, appreciate what the hell just happened and what we lived through, which was a lot.
Yeah.
I don't know. And also, like, here I am sitting in a privileged standpoint where it's like, no, we just kind of locked down and we shut down our lives and I'm now feeling it. Whereas other people just, like, literally just had to go out there and do it. I don't know. We all live too differently, maybe.
Yeah, that's.
Anyway, this is totally
that's a deep line of thinking.
Yeah.
Because I don't have a good response to it. It's interesting though.
Yeah. It was just something that, well, especially after reading Fourth Turning, it made me think about that stuff more, because it's like, well, we just lived through an event that in almost any other time could have, let's call it a higher than 70% chance, could have been such an event.
In some way, yeah. Although, I mean, we've also had previous, like, was the flu pandemic of 1918, like, what did that do in relation to
World War One?
Yeah. I guess you also had World War One going on, so it didn't matter because you had that crisis going. So
there's a lot.
Yeah.
Or like, how much are those two? Well, I'd have to go back and look at dates. Which one came first?
World War One, the pandemic, or the flu? It would be World War One, wouldn't it? Didn't that start in like? Didn't that start 16?
I started doubting myself, so I didn't give an answer.
Yeah, no, now I'm doubting myself too. But you know,
because 1918 was the end of World War One.
I thought it was towards the end. Yeah, July 28th, 1914 to November 11th, 1918 was Armistice Day. Now,
okay,
Veterans
so
Day,
the world
right?
gets more peaceful again. People start traveling, and then there's a flu outbreak.
Yeah, and that killed a lot.
And World War
One
was
more
one
people.
that didn't.
Yeah.
Oh no, way more people.
Yeah.
And it wasn't like it was a war of closure.
No, that's why they had to have World War II and redo it a couple of years later, right? Because of all the loose threads.
Fourth turnings are hard.
All the misalignments that still people were very, very upset about. After.
Okay, well, anyway, I'm hoping that we are talking like way in the future, because I'm not really stoked about living through.
I don't want to. Yeah, I don't want to deal with that. I'm with you. So let's hope that we don't need to have one of those.
Well, I don't know. Like, you kind of have to. Well, one of the questions I was asking myself when listening to the book, right? Like, if let's say the fourth turning is 5 years from now, that would put us in prime age ranges of being part of that hero generation.
No? Yeah, it would. I mean,
it'd be leading the younger. It'd be the millennials leading the Gen Zs through the hero's journey, or whatever you want to call it.
Yeah, very much. I think that would be, and that's kind of one of the premises that Howe and Strauss put forth, was that it would be our age group that would be going through that in the late 2020s, early 2030s, and we're getting close to being the back half of the 2020s here. So,
well, we'll see. Yeah. There's time. All right. So you had some like more. I kind of just went with the standard playbook on my predictions last time, but you went a little bit further, which I liked. And here's one thing that you had said last time, which was what, in January or something?
Yeah.
A significant ESG, environmental, social, and governance scandal may occur, potentially involving fraudulent carbon credits or other greenwashing practices.
It hasn't happened.
Have you kept up on the news?
Yeah, I can't think of one that's happened, but I also feel like maybe one has happened.
It's just too small to get headlines, or everyone is sort of off.
So can we count? No, it's not a scandal. Say that the Texas Stock Exchange opening up to be anti-woke and be anti-ESG. This has not happened yet. I still say that I think there's still a pretty good chance of it happening somewhere here, and this is going to happen at some point if over a long enough time, right? Over a long enough time.
You've already got your own power grid, right? So why not your own stock exchange?
I mean,
and also this fits with the whole atomization of things, right?
It does. Yeah. Well, and what's funny is that the stock exchange is practically, unless they actually get listings on it. So
it's a data center.
It's basically just a data center. And the funny thing is they'll still house the data center in Secaucus, New Jersey, because they need to be
Yeah. Yes, totally. Yeah. Well, we want good execution.
But there will be people selling equities in Dallas, as Michael Lewis once wrote about in Liar's Poker.
But if they don't, let's say that they were like dogmatic about this and they got to build it on Texas soil, which, I mean, given the narrative, I feel like they deserve to. That's just gonna are we just all gonna move to Arkansas and be arbitrageurs, or what?
I guess move where somewhere's cheap and be playing. I
hear Bentonville's nice, and if I can arbitrage, then I'll set up a computer to do it.
Yeah. No, I think that it's a silly idea that I'm sure there's people that are going to make some money off of it, but it's just to be a data center processing orders back and forth, and it's not going to have any substantial change unless
LPs will lose their money.
Unless like Tesla decides to move to Texas and they want to go ahead and relist on a new exchange. That's the only way I see that thing blowing up to any appreciable importance close to NASDAQ or NYSE. But there's how many different exchanges out there? The dozens. Who cares? A big rip. Anyway, but yeah, not an ESG scandal at all. I can't think of anything. I have not. I did a quick Google search here. I can't think of anything that has happened. Copper price. You had another one. Copper prices ripping is interesting in terms of the ESG lens because of what we have to. If we're going to electrify the grid, we're going to have a lot more copper and a lot more aluminum. And what did it get up to this year? It went from. Where did we start the year off? Around $8,000 per metric ton, and then it spiked up to $10,000 per metric ton. So, about a 25% jump in the span of a few months.
Yeah.
And as we've talked about, in our actually we haven't talked about it yet. As we were going to be talking about when we finally get to talking about copper in Chile, right? There's a definite structural copper supply problem in the world. Not problem, but situation that we're going to have to manage carefully and have a very good recycling loop built in. So
make some choices that in today's world feel like they are unlikely to be made, but we're going to have to make them.
So
something along those lines, right?
That's the closest thing I got is the price of copper and the price of cocoa going nuts, but that's not really ESG. It's just somewhat related.
You also suggested that holding on to older cars could be incentivized to reduce the environmental impact of manufacturing new vehicles. I'm now seeing headlines that more Americans are buying used rather than new.
Look at that.
But it's being driven by insurance prices because new cars are just really expensive
and all of the new cars have all these sensors that when they fail more, if you're in an accident, they're much more expensive to repair. Insurance rates going way up, interest rates themselves being high. I was counter to this. I was listening to a podcast where they were discussing lithium demand and lithium supply in China. And something interesting was said that I'd never really considered, that China is basically going to go flood the market in other parts of the world with cheap EVs so that they have demand for all their lithium supply. So initially I was thinking that, they'd be wanting to be using, internal combustion engines in a lot of these places. But I think maybe some of the places that are developing now will end up getting a lot of this benefit a lot more sooner on than I thought of through that lens. And so, I don't know.
I mean, one of the outlooks on EVs worldwide has been that it's not quite possible, because how are you going to sell an EV to someone in a town that has lights on for 35% of the day?
Yeah, that's the problem is with that theory is then if where are these markets that they're selling them into that really but then you have the possibility of like a state like Russia coming in and saying, hey, we have all this uranium that nobody else can buy right now. So what we're going to do is we're going to build a power plant for you. Like, you pay us for the power plant. We'll keep it supplied with uranium essentially, and work that into the economics there to keep. So Russia might actually be going around trying to. I think this is probably a little conspiracy theory-ish, but it's conceivable. But going around to like the Sahel as one area that was mentioned, or in the Congo, a lot of these places where there's a lot of conflict or are not clear political lines.
That's the last place I'd want to put a reactor. But
but hey, if they can, if Russia comes in and says we're going to put some reactors around, and China says we're going to give you all these cheap modes of transport, then maybe that part of the world skips a lot of the internal combustion engine usage.
It's called leapfrogging.
Yeah, exactly. It's a possibility I hadn't thought of before. That now it seems it's not. It makes sense that something like that could happen. So Yeah.
All right.
But yeah, there's no way anybody's going to incentivize holding on to older cars through tax incentives or anything like that. That's just not practical. There's too many lobbyists against that.
There are, yeah. Although what's interesting is like, I think if you're into leasing, or let's say your business needs a car, leasing makes a lot of sense. Some of these smaller but still long range EVs are now, I mean, it's like $200 or $300 a month.
Wow.
And they're like decently nice cars. I know, yeah. Between the $7,500 tax credit and blah 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 something else, blah blah blah, EV sales slowing down, like that combination of things coming together, you can lease one for pretty cheap.
Good to know. Will people?
Which is good. Yeah. I mean, that in theory, that would put EVs into more people's hands that otherwise might not have made that choice. So
yeah, I think that is good. Yeah. That is good overall.
All right, I'm done with January.
I think so.
What about today?
I think we beat ourselves up enough about what we talked about, got right and got wrong. So what do we want to talk about here for H2 for July onward, Dan? What's going to happen?
I don't know. I have so little confidence in myself now these days. So these, normally I like to say, what's the phrase? Like strong opinions held lightly.
Yes.
Now I'm just like light opinions held lightly when it comes to prognosticating on the economy.
Liquid opinions held in a sieve.
So we took a couple notes of just different broad areas to sort of touch on, but in terms of
let's carry on some of the ones that we started off the year with. So interest rate moves. We thought 2 moves this year, one first half, one second half. I still think there's at least one in the second half. Probably not more than 2 though.
Definitely not. I don't think we're gonna hit 2. If we do have one, it'll only be one. And then they'll let Q4 happen because people typically spend. I mean, unless people are in breadlines and stuff again, then
let the year roll over. And I think next year we'll see how the dynamics change. It's because every year everything resets in January, like psychologically for some reason I don't get.
Okay, couple hitches in the get along here. One is they waited too long to raise rates. Is that scar still fresh enough that the Fed collectively are too scared or are they too jumpy around cuts, right? Like I feel like whatever their if that hadn't have happened, whatever their choice would be is now like not quite possible. It has to get moved up or back on the timeline. Oh, does that make sense?
Yeah, it does.
But I don't know which direction. So that's, not helpful.
What if they raise it for half the country and lower it for the other half and just do something really wild?
Well, that kind of gets me to my second point, which is, will Jerome Powell still be in power?
That depends who wins in November, right?
Yeah, it kind of does. And I don't know. I'm not a good enough student of the Fed to tell you like how that election nomination process happens. But I do feel like there is one candidate that is running for president that would rather not pay any credence to the sort of rules and norms that have been created around monetary policy.
I agree. That's likely on one side of the debate for sure. I think still possibly. You don't think 2? I still think possibly 2, but I still think we're gonna get a cut this half. All right.
Okay.
Other than that, I don't know if we had anything we need to revisit from the first half. Other than we already talked about. No, we still don't see a recession. So let's move on to our other our some new content here.
The indices.
What's gonna So let's look at where is the S&P today? Where are we at as of record time? It's Saturday, so I haven't looked.
5347.
5347. Okay.
Ish something.
So we're around 5,300, which is actually a lot higher than most people in Q4 were saying we'd get this year. I think I was seeing 5,400 for the end of the year. Which, hey, is that a possibility? Do we just trade sideways for the rest of the year?
I think that's a real possibility. Yeah.
Are things kind of tapped out in terms of we've had a pretty decent little bear run here, not having much motion and being down 5% from here at the end of the year would not surprise me, because you'd still be up on the year, but it would be happens what happens in November.
It's just such a wild card.
Yeah,
it really is, to put a nail on December 31st.
Yeah.
But in terms of, let's call it just overall performance, like drag me from here to the end of the year, sort of put the election aside. Let's just think about the economy and the market, which are two different things. Where's the market going to be?
I think it's more likely that we're going to be up another 5% than down another 5%. So I'm going to say up another 5% from here.
Okay. Now, I want to drill into that 5%.
Okay.
In your mind, is that because of just broad overall market performance?
That's going to go times 10 and everything else is going to stay flat. That's what it is.
That's how I feel too. Yeah. Yes. There's going to be like,
honestly, like in a way, like I think the index is going to be heavily, like the index itself will be up 5%. You're going to have a lot of companies that are trading sideways to down, and a few big winners there at the top of the index.
So if the economy is softening, then eventually companies are going to turn that into quarterly results. They're going to miss. Stocks will trade down.
Mm-hmm.
That's kind of how I see.
And I
the majority of companies doing, but then less than 10 stocks will carry the day.
Exactly, but the day will still be carried because of the way it works.
Yes,
because
they're so huge. Yeah, market cap.
Yeah,
I'm with you on that one.
Okay, so speaking of Nvidia and relative prices, does TSMC start to get at some steam picked up here this year, along with Nvidia and ASML? Because I feel like they're the other couple of stocks that people don't talk about as much. That really, man, I don't see how we do it without them.
Well, yes, both those companies, yes. So, what is the EUV?
Yeah.
Like, no one else has that besides ASML.
Exactly. And ASML, if China were to invade Taiwan, where Taiwan Semiconductor Manufacturing Company, right? TSM?
Yes.
Resides. ASML has remote kill switches and all these multi-billion-dollar machines that make the world's best chips, that they can just, pretty much deactivate these complex machines, which I'm sure China eventually could probably figure out how to get them working again, but I can't imagine it would be within a few years time frame, at which point that technology is probably no longer even cutting edge. So I think
these machines are so sensitive, right? Like when the train goes by, they have to like stop or something.
Probably. I mean, they're cutting things. They're taking light and turning into bands that are 2 to 3 nanometers wide and etching into silicon chips these circuit patterns that are these electromechanical brains, for lack of a better term. So yeah, that to be that precise, I'm sure that has to be a very still location. I would not have put it on the Pacific Rim, but that's just me.
Yeah, I don't think that was totally on purpose.
Yeah, no, I think that was probably other reasons driving that. But yeah, what do you think on the indexes?
Okay, just to give people, they're dealing with light that is 2 to 3 nanometers in width. They're basically moving atoms, right?
Yep.
2.5 nanometers in diameter. Your DNA.
Wow.
Your DNA. A bacterium is 2.5 micrometers long.
100. What is that? 1000x nano to micro.
Something like that. Yeah, I think you're right.
Yeah.
I haven't dealt in nano in a while.
I'm pretty sure.
Anyway, I feel like having something a little bit more tangible, something that you can like put in your mind of like what is 2 or 3 nanometers. Yeah.
Because you're right. That's impossibly an impossibly small.
It's impossibly small. And this is why are you familiar with Moore's law?
Yeah, absolutely. But I don't think our listeners are. So why don't you talk to us a bit about
it? Make me explain it. Basically, it was like a doubling of process power over some increment of time.
Every 8 years, I think he said that processing power would effectively double, because as we have processing power, allows us to figure out how to make better processing power. It builds on itself, essentially. And so there's been some question about, at some point this has to break, because you can't only make shit so small, right? But they're starting to figure out how to stack things in other ways that people were going to get.
No physical with no physical limitations. It was just our own learning and being able to do and come up with new innovative ingenuity,
Yep.
all that kind of stuff, getting us down the path. And when we were the only ones roadblocking ourselves,
Yeah.
right? We had to create new knowledge and new tools and new ways, and thus Moore's law. So like that is sort of the pace with which we were chasing this doubling of performance. However, we're now running into actual physical limitations because you cannot go smaller than one atom.
Yeah, precisely. Like there are atomic limitations, and that's when, unless we get into quantum computing, like starting to make that work,
That's a whole
different thing with a whole different system of logic that I have no idea how exactly it works.
I can't even begin to help you explain
which maybe that gets us, there someday. But yeah, I think there's a practical physical limitation on Moore's law that we'll start to probably see within our lifetimes. But I think we'll still see more computing power through more unique configurations of chips and arrays together, like with what they're doing in data centers and how they're using, it's not necessarily the doubling the speed like we thought in a traditional sense, but they're still getting more efficient and more processing power.
Well, the efficiency is a big deal, right?
Yeah.
We've talked about data center power demand and stuff like that. So like if we hit whatever limit, or at least approach the limit such that the laws of diminishing returns starts to show, then you dial in on your efficiency and lower your electricity costs for the same amount of compute, or you have software defined something or other, kind of like software defined networking went. Back it's like you just throw in your sort of non-brand switches and then let the software define the network. It was like a big leap in terms of how things work. There'd be some similar kind of leap with compute.
Yeah.
Maybe.
Yeah. This is outside of the realm of my expertise.
Kind of above my pay grade.
Yeah. But it's fun to think about and fun to imagine.
It is really fun
how
to speculate.
It might work.
So the answer to the question, does TSMC squeeze NVIDIA? Wouldn't they have by now squeezed someone?
Right. I don't know. Because Morris Chang is the founder of TSMC. It's still there, and maybe he and Jensen are just tight. I don't know.
Maybe. They're both born in Taiwan. Yeah.
Yeah. I'm just they're the one person I could see actually squeezing NVIDIA on margins, because the only other way I see NVIDIA getting squeezed on margins, like their earnings keep going up quarter after quarter, which is justifying a lot of the movement in their stock price. They have, a stock price moving with justification, unlike some auto companies that make electric cars that I know of in the past. And I think that what could hurt them is, first off, are they pulling forward a lot of potential demand because people think, oh, this is going to be a lot bigger than it is, a lot quicker, and so then maybe it cools off for a while and then picks back up after a lull, because everything bullwhips, everything goes up and down a little bit in terms of a cycle. So in that aspect, that could hurt NVIDIA. But the only other person I can see hurting NVIDIA is their biggest suppliers, and I think that's TSMC, cutting all their chips.
Yeah,
because NVIDIA is a fabless foundry, so it doesn't seem like AMD or Intel are anywhere close to catching up with them at the moment.
There's a difference in economics, though, right? So, like, if TSMC wants to grow their business by 40%, they're going to have to spend billions of dollars to do it, and new fabs, new employees, and the economics of NVIDIA aren't quite that way, right?
That's
it's like
fair.
More of an IP business and software business.
That's fair.
So it's hard to have a stock price on TSMC, let's say, that shoots to the moon, because in order for them to achieve that goal,
I'm not saying TSM would shoot to the moon. I'm saying that they would erode NVIDIA's margins. I would think help TSM's price, but I'm not saying that they necessarily go to the moon themselves. I don't think that's the case.
Yeah,
because of the capital cost.
Well, okay, so then going with my line, does TSMC need to squeeze NVIDIA and everyone else?
Yeah,
maybe. Do they need to be harvesting more dollars so that they can make the investments needed in order to...
I mean, they're building 2 fabs here in the U.S. in the Southwest, right?
Yeah.
And
I think they're going to spend way, way more money on employees. Way more.
So
the little bit I know about the work culture of TSMC in Taiwan is that it's hard. Taiwan wages are nothing like the United States. But if you work at TSMC, you get paid higher than most of your peers. But it is like if the phone rings at 2 a.m., you're picking it up. That's what I've heard.
That does not surprise
and
me.
To get Americans to do that is
well, you
kind of
say
expensive.
that, but that's the oil field, and well, yeah, it's expensive. But I'm saying that's also the oil field, and that's there's a lot of things that do that. But yeah, you're right.
No doubt.
It's more costly.
But I also know that if you want to go harvest crabs or go and work on an oil rig, you can make crap tons of money for 4 months.
Yeah,
you know
exactly. So,
and that's not quite the economics it seems like in Taiwan.
Yeah, that's reasonable. Reasonable.
So then if I don't know, I keep going back to like, yeah, maybe squeeze is too strong of a word, but prices are going up.
I mean, I don't know. They're again, they have power that in a way that most others don't.
Yeah, and they've been really responsible with that power, I feel like.
Yeah, I think so too. Which is probably
All right,
probably what's let them help them maintain and build upon it too. Like they
agree.
You know, I think people would be much more interested in trying to get better performance out of NVIDIA or Intel if TSMC wasn't good to work with, right? Like
100%. Or if you knew that, like, if you made a banger product, you were immediately needing to open channels to Samsung or something.
Yeah.
Because, yeah.
Samsung. We never talk about Samsung because it's hard to buy their freaking stock. But man, Samsung's another good chip making company. All right. What do you
yield curve? Where is it today?
Yield curve. We are currently. Let's pull it up on the screen. I'll share it here. So I'm looking at right now the 10-year yield curve minus the 10-year yield minus the 3-month yield, and so we're talking about duration risk when we're talking about the yield curve, right, Dan?
Yeah.
So if I'm loaning somebody money for 10 years, I would expect to be paid a higher rate of interest than if I am for 3 months, because there's a lot more chance of them not paying me back over those 10 years. Right now, though, for the U.S. Treasury, you actually are the 10-year is discounted to the 3-month bill because we haven't had interest rates this high out that long for a long time. I think there's been so much demand for people wanting to get those bills at those rates that the demand ultimately drives up the cost of the bonds, which drives down the yield on them. So we get this inversion here. What do you where am I screwing up there, Dan?
You know, I think you did just fine. Because I'm not great at explaining it myself.
Yeah. So
does it stay? I guess does it stay here?
It can't stay here forever. I think this is when we see the yield curve inverting. So legacy, historically, an inversion of the yield curve has been an indicator of a recession, right? If we zoom out here.
Yes. It's like 90+% or something, right? Like,
yeah, well, let's zoom out and let's see if I can figure out how to zoom out.
It's been like the stalwart indicator.
Has it been a stalwart indicator? Yeah. So yeah, it's usually it usually precedes a recession by a few quarters. So like here, back in 90, seeing it. I'm sorry. Yeah, 89 and 90, dipping before a recession hitting in 91.
Yeah. That's the economy, stupid.
Yeah. The 2000.
Right? Like that's what.
Yeah.
Yeah.
So I mean, it's typical where we have a dip here below this zero, and then a few months later, like I think it tends to be 6 months later, 8 months later. I remember reading there was an average, but an average doesn't mean anything.
It definitely varies because that one with .com is really close.
Yeah, and then .com very close. 07 to 08,
longer,
a little longer. On top of each other, 2020. So it's again not a perfect indicator. There's been a couple times when right now you can see we've been inverted since mid 2022 on this metric, and heavily inverted. Like look how crazy different it is here compared to earlier readings. I wish what's the
if you were to believe
82 is
that this thing is correct, then you would be battening down the hatches for one of the wildest times in your life.
Yeah, and I still have to say, like, this is a byproduct of zero interest rate policy. It feels like where we didn't have
it does feel
rates worth buying bonds for so long that people just weren't buying bonds. And now that they're available, there's just so much demand for them. And is this necessarily a sign of the economy faltering, or a sign of like, oh, we had a really sick monetary policy for 8 years that is inducing this now?
The stomach is in knots. We still haven't really recovered.
So, but let's talk. So, what happens when it uninverts? What does that mechanically mean? So, interest rates come up on the 10-year versus the 3, right? So,
because it should be ideally more expensive to borrow money for a longer duration.
So, if that happens, what happens to the price of the bonds?
Rates go up, the price goes down.
That's right. It's a seesaw. So all the people holding bonds, buying them today at these elevated prices, all of a sudden get a lot of principal risk, right? Basically, like you have this bond that you paid. In this case, they're paying a premium for these bonds, which is what's to me wild, is that you're paying $1,200 for something that you should be paying $1,000 for, and that at the end of its life, you're only going to get $1,000 back for, right? But you're getting interest along the way to make up for it. But if these rates correct, then their bonds actually, the par value, I'm sorry, not the par value, their face value, what they're going to be able to sell them for is going to decrease. So people are going to take a hit to their principal in their in a lot of their accounts if that happens. I don't know that's necessarily terrible because of the way people use bonds, but it's worth noting.
Now, isn't pair trading like you might trade the 2-year versus the 10-year?
Mm-hmm.
The relationship between the two?
Yep.
Okay.
Yeah, so you could say, hey, I want to buy this right now. I want to buy this. I want to pair trade this. So I'm buying it at this low level and then ride it up to there. Like that's not a bad idea. Now you got me thinking, Dan.
But like in mid 22, you're watching this thing dive.
Mm-hmm.
You would be wanting to. My mind has such a hard. I have to draw. You'd buy. You would. Oh my god.
Note it out real quick.
So you're making a position with both the 2-year and 10-year at the same time,
mm-hmm.
right?
I would be because you'd be selling one and buying the other, right?
Historically, it never stays inverted long, right? So if you've got the stamina, you could make that investment all through the inversion and then rock it out the other side. Might take a year or whatever, but you'd make a lot of money.
I bet there's people that started making that trade back in 22 right now. That's 18 months.
That's what I'm talking about.
Like they had to be hurting so bad.
This is longest,
like now I'm like, hey, now this feels like finally, like we're starting to see this, if we want to talk.
Maybe you can do it now.
Hey, if we want to do some technical analysis, let's zoom way in here. You have an uptrend, right? An underlying uptrend where even as it drops, it bottoms, then it starts to come up and drop and come up and drop and come up. So you have an underlying uptrend with you're going to get the wedge here, right? Where you hit this inflection point where
where's the head and shoulders?
Yeah. So pretty soon here, we should be, if I was at all a technical charter, we could predict as to when we're going to see this inflection point. I mean, it's not the same, but it's probably also not that different. I don't know.
Yeah.
But it does feel like that has to inflect, and I think it happens after the election. I wouldn't be surprised to see that inflect and to start to reverse in Q4.
Interesting. All right. So is this just a reflection of our collective psychology?
No. Just so I'm taking a stance. No.
Yeah, that's what it felt like.
No, because I think it's more than collective psychology. In this case, there's also supply and demand for these higher earning instruments. But again, that I think after some period of time, that increased demand for them starts to balance and reach an equilibrium, which starts to uninvert the curve, so to speak. And I feel like that could happen in the last quarter of the year. I don't think we're there yet, but it wouldn't surprise me to see Q4, like November, December, start to see this thing really. When things seem to get funky in November sometimes. Is it just me? October, November?
Well, November 21.
Yeah,
that was my time.
So I think that start of the fourth quarter. we start to see a sea change into the next year's market mentality and investor mentality, and that's when I think some of these moves start to happen.
And then computers get shut off around December 18th.
Yeah, right. So November. Yeah, look, it inverted in October of 22. So.
Oh, no way.
Yeah.
Interesting. Okay.
So yeah. So there you go. I'm saying November 24. It comes back. Something dumb. I'm definitely going to be wrong on. I will be 100. No, there's no way I'm right on that. But at least we'll have something to talk about
November
at the end of the year.
24. You're talking about the month.
Yes. Yeah. I think sometime in. I think by the end of November.
Otherwise, I'm going to be texting you while you're eating turkey. You're going to be the modern day Nostradamus.
Yeah. Right.
Rig count.
This one.
I have no position here. I have no idea.
This one is
not something I watch.
Yeah, this is one that I'm interested in occasionally because of working in oil and gas, and it has been. Let me see if I can find a good chart to share. This is, to me, it's not super important indicator other than it shows us. I mean, one, how busy the oil and gas industry is going to be. I'm just looking at the rig count here in North America, which has been interesting since oil prices went negative. Things got wild. So back in 2012 or so, there used to be about 1,200 rigs. Actually, at one point 2012, I think we had 2,000 rigs in North America. Now what's fascinating is we're still drilling almost the same number of holes, but just with a lot fewer rigs because we're a lot more efficient at it. But you can see coming after oil prices turned negative during the pandemic, rig count obviously plummeted down to the low 250s. And then this was a pretty strong period of growth for a lot of the companies in the industry, really adding a lot of capacity. And when was it? But during this time frame, we passed Saudi as the largest exporter of gas, oil and gas at one point.
We're a net exporter.
Yeah, we are. So, but since 23. This thing started to tick down pretty consistently, and it feels like we're hitting the bottom. It feels like to me we should be hitting the bottom of this cycle. It looks like things were starting to kind of to level off last part of last year into this year, but this downturn here to me is an unexpected acceleration in the number of rigs going down in the U.S. I suspect this is things moving more offshore and things moving to. Guyana, yeah, Guyana for sure. Offshore Africa, Saudi Arabia is still obviously really, really, really active. I mean, there's activity all over the world constantly that people probably don't realize. But I think this is a little bit of the U.S. Maybe becoming not quite as dominant a producer for the next couple of years, or maybe not being such as much in the driver's seat as we have been for the last decade. And I think that might be an intentional thing as well. But I'll be curious to see what the oil and gas industry looks like going into the election, because that could. I mean, prices right now are very good. What I think in the 70s for crude, which is back in 2022, people were saying, "Oh, crude's going to get to 250 a barrel," which is ridiculous. But I'm very surprised we haven't seen it cross 100. And a lot of people are saying it's more likely to hit 50 than 100 at this point. So, I think overall good story for our energy prices in this country, and for our future energy stability overall. But I think this has to bottom out and start ticking back up by the end of the year. But I'm going to be sad if it doesn't. So my prediction here would be seeing this over 600 by the end of the year. But I'm feeling real iffy about that right now.
Okay. Well, that says a lot about total outlook, overall outlook.
There's been some growth elsewhere, other growth elsewhere in the world, but even Saudi has for the last couple of years kind of capped their production a bit. I think there's a lot of oil flowing out of Russia that is filling into the market and through other channels that is causing changes as well, because they still have a lot of oil that they make that they would love for people to buy.
And people are buying.
Yeah, and people like India, I think, likes their oil quite a bit.
Yeah. All right. When do global containers start flowing through Suez Canal again?
How long have they stopped? And how big of an issue is it?
Good question.
And this is related to the conflict with the Houthis specifically.
The Iran-backed Houthis.
Yes. Yeah. Let's see if I can. I mean, is it closed, or is it just that people have diverted a large number of...
Diverted.
Okay, yeah.
So if you listen to Zion, he's saying something along the lines of, if I recall correctly, if the boat's flying a Chinese flag, you're good. If the boat flies an Iranian flag, you're good. If the boat contains oil or gas or some sort of hydrocarbon, you're good. But if it's a global container ship and it's not Chinese or not Iranian, it's getting attacked. So you've seen the Danes. What did he say? The Danes, who are the other major flags? Danes, Panamanians, maybe.
Whoa!
Anyway, he named 4 flags that basically are completely rerouting around the Horn of Africa.
No doubt. I have absolutely no doubt about that. Given that what I was just looking at here, so I found a chart describing the daily transit volume going through the Suez Canal, and this is in terms of millions of metric tons, 7-day moving average. So for January 23 to January 24, we're averaging about 5.5 million metric tons through the Suez Canal, and it's gone down to 2. So a 60% decline roughly, right? Whereas the Cape of Good Hope has done the exact opposite and absorbed all that routing. So you see everybody's sending you're right. Everybody's sending it down around the Cape of Good Hope.
So this journey is way longer, right? So boats are tied up for longer to ship the same container. So it's not a matter of like, well, I only ship stuff from China to Port of LA. It doesn't matter. More boats are in more demand. Container prices are up. But these things flare up. This isn't like a first time.
And so I wonder what the impact of this rerouting is in terms of overall cost. Obviously, the time to get stuff is huge.
Way more fuel. More stops.
Interesting. I'm going to do some digging on reading on what the.
Can you send me this one?
Yeah, I absolutely can. This is from the IMF, the International Monetary Fund. They called it the chart of the week, and I'd say they aptly described that, because that's well. I think we close with 2 final questions.
Oh, 2.
There's 2 but they're kind of related because they're kind of in the same vein. I think you'll know where I'm going with these.
I know one of them.
Are we going to see Mr. Keith Gill get sued for stock market?
Who's Keith Gill?
I'm sorry, Roaring Kitty. Are we going to see the internet cat guy get sued for market manipulation over everything? I mean, I have thoroughly gotten entertainment out of everything going on this week. I have not touched that thing with a 10-foot pole. Apparently, he's done very well for himself over the last couple of years, growing his position. I mean,
where'd that money come from?
I was watching the stream he finally did, which was a wild experience. And
yes,
and just looking at the math on the screen, it's like the cost basis for his current position was 175 million, I think it was. So yeah. Clearly, he's been...
Okay, so 2 questions then. 1, does he have a backer? And how much does that complicate any sort of consequences, right?
Right.
2, has he just been quiet these past 3 years, been trading and doing remarkably well?
Yeah, trading in channels. Just scalping in these channels and just possibly. That's I want to know. I want to know now. Like...
because watching that stream, I was like, dude, you're so dumb now.
Yeah.
Like, what happened?
But if you think about it, so I was trying to get behind the mindset of that. If you've done this well and you have $175 million, and then you like, you know what, I just want to show everybody how well I've done and show them what I can still do. And then he does his thing, drives the cost up where he's, up another 80% or so, up to almost 400 million or 450 million, and then like during the stream, he lost 200 million as he was talking, but he's still up on the starting position. So like, does he really care? Like everybody's like, oh, why is he? Shouldn't he be bummed out about this money disappearing? But he's also possibly has more money than he ever needs. I mean, I would think so. Maybe he just doesn't care. Like at this point, it's just fun, and he's screwing around.
What if he's playing a totally different game?
I don't understand his motivations, and I'm fascinated by it. Like, what are your thoughts? Like, what do you think he's doing? What would you do?
I don't know what he's doing. However, I do step back and like, let's put aside the whole he has a backer thing, right? Some sort of LP or whatever.
That's the least entertaining option.
It is, yeah. But the more entertaining option to me is that he's had a banger 3 years on the cash pile that he had generated off of his last go of GME and related stocks. I'm now wondering if there's like 4D chess going on, and there's something else that has yet to be revealed.
Right?
More games will be played.
I feel like we're not at the end of this little blurb of this, and
because this is all about like the whole mission here, or the whole narrative is around like working for the little guy, right? And screwing Wall Street. That's like how all this got kind of started, I think. And I walked away from the live stream this week thinking like, okay, if there is strategy and stuff going on, then this was his way of saying, last chance, guys, get in.
And
that's giving him a lot of credit.
That's giving him a lot of credit. You're right. Now you make me want to go buy a few shares on Monday. Just to
buy some calls.
Just take a flyer on it and watch what happens. I like that, honestly, a lot. I feel like
the narrative. Like every single time I felt like he was supposed to get knocked down and not get back up, he's always back. So like, why should I doubt him this time?
That 175 million that he bought that position with came from somewhere. I'm fascinated.
He might be really good.
I'm fascinated. Maybe he just, after he made the money last time on GameStop, maybe he just went and rolled it all in NVIDIA and just left it sit and then just moved it. You know, I don't know.
Oh my God. Yeah. Right.
All right. And then lastly, is Elon going to get paid this year? This is one that I'm interested in because I think and if he doesn't get paid, does he quit?
See, I don't think he'll quit.
I don't think so either. I think having the public company is too much of a bank for him, for his other 8 companies.
It's too much of a bank. I think he hates having a public company, but it is his personal bank. Yeah. Now, if he gets screwed by shareholders, does he screw them back? He'll screw himself, but does he do it?
I mean, he's petty enough, it feels like, too.
He is. I think so.
So I feel like I think they pay him.
So,
and
I don't know.
I think this becomes a moot point, but because if they don't pay him, I do think he screws the shareholders, and I think the shareholders are scared of that. So I think they pay him.
Oh yeah, yeah. I forget a lot of the details here. I'd have to go dig them back up. But like, he was promised this money based on if you met particular metrics.
He got a pay package that was awarded to him. With he would be granted options if he took the company to $500 billion in total market cap, which was a long way off. It was like 4 or 5x from where they were, and he did it in 3 years. And so they awarded him the options, you know. But then somebody sued, saying, "Well, the way that they awarded him these options, it was voted on, but it wasn't fully disclosed how." That it hadn't been reviewed by a third-party board, and there were some legalese that should have been done that wasn't. They didn't dot the T's and cross the I's properly. So these lawyers got together and sued them in the state of Delaware, and they said this pay package was, you know, improper per various Delaware precedents, and the judge, I believe, was Kathleen McCormick. I'm sorry, the chancellor, who also was in the Twitter case, oversaw that one too. Ended up agreeing and tossed it out. So his $55 billion basically got put into escrow, sitting there waiting for appeal. They're also too.
But either way, he had a package. There were rules. He met requirements.
I agree.
If my employer came to me and said, "I'm not giving you the money," based on this deal that we had, I'd be pissed off. I'd be going to court.
And the only reason that it got overturned was that they made them overturn the pay package was that there wasn't enough third-party oversight, that Elon was self-dealing that pay to him as having too much power as the CEO and chairman of the board, and that there wasn't enough independent third-party oversight in making that a decision on the amount. What they've done in their upcoming proxy vote, they've taken the judge's statement and put it in the proxy, and they're re-voting on this pay package and saying, here are the risks, here's why we're re-voting it, and here's everything you need to know. So that way, if they vote for it again, they're pretty sure there's no way in heck it can be tossed back out.
Could you buy a share of Tesla stock today in order and participate in the vote?
Oh, I don't know what the timing is on that. That's a good question. Let's find out. Tesla vote for pay. They're also going to vote to move to Texas or reincorporate in Texas, I believe.
Yeah, I think they already started that.
Yeah, is Prop 3 and 4 when? I can't seem to find it quickly here. I'll have to dig that up. I think you might still be able to get a share and get in for the vote. I know it's coming up though. You do have to hold them.
I just thought it's an interesting question. Like if this is not that you're going to do it through our podcast, but like as you get the news, as you read the headlines, different things, like I don't know, do people realize that they can literally just go buy a share and then
absolutely, yeah, you too could go out there, buy a share or two of Tesla and vote for or against Mr. Musk's pay package.
Yeah, democracy, baby.
Yeah,
in the world of public business. Yeah,
very much.
Kind of
pay to vote, baby.
Yeah. You got to pay to vote. Yeah, but you own.
But you also
might get paid back
from that too. So
maybe.
Yeah, maybe. Well, it depends.
Depends on how much that $55 billion is needed inside that company.
Yeah. Also true.
Which they kind of need to redesign some cars. So anyway, those Chinese EVs look really good. Going back to that part of the conversation,
they do look pretty good. I've heard there's a few little some trim, slight imperfections on mismatches and stuff, but. Yeah. For the most part.
There were with Teslas too. Like there were plenty of trim pieces popping open or headliners falling and stuff.
Yeah.
So.
Yeah. When you're making millions of something for the first time, it's hard to do.
It's really hard to do. Most of the car manufacturers have been around for 100+ years now. So
very true.
They've had some time.
Very true. Which I thought would give them a lot more advantage than I am realizing it did.
Yeah. Same.
I thought they would have a lot. I worry about them. Some of them in the longer term.
Yeah.
They still have the capital and facilities and some scale, but in the supply chain built up, but it's so different that I don't know. It seems like some of them are having a hard time figuring out how to be competitive. And also we're probably overspeaking the shift, here, at least domestically, still wildly, dominated by internal combustion engines. So they have, good motivation to keep performing that way, and maybe there's more of an incentive shift. We see a better job of it. But I guess most makers now have at least one electric model, where they at least seem to be trying to get into the space. But it definitely seems like they're having struggles with finding product market fit. And
I think we see more hybrids.
Yeah, I think so too. I think it makes a lot of sense in many ways.
I think it makes a lot of sense. You get a lot of versatility, and then you're not screwed at mile 350 if you haven't been able to figure out where to charge car or something.
I think we will see a lot more of that, and then maybe that does end up helping save more of the existing big three, keep them more in position.
Maybe,
I don't know,
because ICEs are really, really hard, from everything I understand, which is not much.
Yeah,
so whatever.
I think EVs are really, really hard too. I mean, there's a lot more components.
I mean, that's
like all the sensors that we're putting in, that are getting put in them now for, it's the things like full self-driving they're trying to bring around that are adding so much cost.
That's like that's another level up.
Yeah. From what I've heard, I've talked to a couple people that have, a version of it, and it seems like that works pretty well. Which would terrify me. I'm kind of terrified when I see a Tesla on the road.
I know. Yeah. Yeah, but then, like, given how many people I see staring at their phones in their cars, I'm like, you know what? Bring it on. I bet the FSD is better than a human with their eyeballs at their phones, which is
a lot.
Seemingly a lot of
see
people.
a lot of that on the freeway, back and forth every day. You can usually tell when you're coming up behind them because they're going just slightly off speed of everybody else, and like there's something. It's like, oh, this person's gonna be on their phone when I pass by, and they are. You can usually pick them out. Yeah.
All right, Sean, it's been good.
Yeah, it's been fun.
I need to go tend to the
Let's go see how the second half year plays out. We'll come back and see how wrong we were. Thanks everybody for tuning in to another episode of Unqualified Advice. You can find me if you are interested at twitter.com/slowvsm. Dan, anywhere you want people to point at you if they're so interested?
x.com/
Oh, okay, fine. You'll use X. All right. Have a good one, everybody.
No, I prefer Twitter. Yeah. See you guys.
Bye.